Has XRP finally bottomed? Key support holds as Wave-5 breakout trigger nears. A close above $2.22 would confirm a bullish trend, while failure to hold $2.17 could lead to further declines. XRP once again defended the critical $2.17 support zone, despite an 18% monthly drawdown, bouncing into tight consolidation as analysts identify a potential Elliott Wave reversal setup that may mark the end of the corrective cycle. XRP endured a volatile session after spending the last month under heavy selling pressure. Market sentiment softened further earlier in the week before stabilizing as the token approached long-standing trend support. The session's most notable development came at 1500 hours Universal Time Coordinated, when trading volume exploded to 202.7 million tokens, 158% above average, propelling XRP briefly to $2.28 before immediate rejection. Technical analysts note that recent price action aligns with the possible completion of the asset's broader corrective structure. Elliott Wave specialists argue the final leg of the ABC correction likely reached technical exhaustion near $1.88 earlier in the month, a region aligning with major Fibonacci extensions that historically mark cycle lows. XRP traded in a whipsaw 11 cents range between $2.17 and $2.28 throughout Tuesday's session. After the heavy rejection from $2.28, price retreated toward the $2.17 floor before stabilizing in a narrow $2.18 to $2.19 band. Late session action showed constructive accumulation, with XRP climbing from $2.183 to $2.188 as volume spikes at 212 and 215, 387K and 427K, supported the recovery. The bounce off $2.17 and the ability to hold above $2.18 suggest early rebuilding of bullish structure after the earlier rejection. XRP's defensive performance around $2.17 signals buyers are still active around key demand zones despite the monthly decline. The declining peaks of the past week still define a descending resistance structure, but multi-stage consolidation above $2.184 signals accumulation rather than continued distribution. The $2.22 region now acts as the pivot for broader trend reversal. Elliott Wave analysis suggests XRP has completed its Wave-4 corrective structure, with the sequence bottoming near $1.88 at the 161.8% Fibonacci extension, a level commonly associated with the end of deep corrective waves. That a sustained close above $2.22 is considered the technical trigger for the start of Wave-5 expansion. If validated, long-term Fibonacci projections place the extended upside target near $5.85, 261.8% extension, though XRP must first reclaim $2.22, then $2.28 to confirm breakout strength. Volume behavior supports the reversal thesis. Heavy buying during the $2.28 test followed by smaller, persistent accumulation near $2.18 suggests positioning ahead of potential breakout attempts. XRP sits at a pivotal inflection point. Holding $2.17 is essential for preserving the emerging reversal structure. A close above $2.22 would signal the first legitimate bullish confirmation in weeks and potentially activate broader Wave-5 targets. Failure below $2.17 reopens $2.10 and $1.98, invalidating the bullish count. Given strengthening ETF flows, recovering intraday accumulation, and the possibility of a completed corrective wave, XRP's trajectory over the next 48 to 72 hours may determine whether the token begins a new macro expansion phase or re-enters deeper consolidation.